Most people think of Kickstarter, Indiegogo, or GoFundMe when they hear the word crowdfunding. Or maybe they think about that inflatable Lionel Richie head that was wonderfully brought into this world thanks to a crowdfunding campaign. Or that guy in Ohio who raised $55,000 to make potato salad. I kid you not. He even created it for the first time. Never made potato salad. Or maybe you've seen a crowdfunding campaign to help a sick neighbor or a family member in need. Well, crowdfunding is evolving, my friends, into a pathway to help you actually build wealth faster. I'm Susan Elliott, and in this video, I'm going to dive into the evolution of crowdfunding and how the technology has finally caught up with the ability to invest directly into assets rather than just making a donation. Stick around to see how this makes a huge difference in your ability to get your money working for you and leveraging the power of passive real estate investing. If you're new here, hit that subscribe button and like this video so that more real estate investing education that you can actually use will pop up in your feed. All right, let's jump in. Early stage crowdfunding platforms have allowed anyone to raise money to fund a project, a business, a cause, or anything really, like creating crystal bacon-shaped jewelry or anti-zombie soap. The creator of these funds can offer tiered rewards or other perks to attract supporters. You've probably participated in one. Perhaps you even have a sticker or a mug or something to remind you of your support. Crowdfunding began developing momentum in the past decade as a way for larger sums of money to be raised by friends, families, and even strangers. However, not all crowdfunds are the same these days. Far from it. These early types of crowdfunds are actually funded by donations, not investments. Donors may receive a product or a discount, but they don't have any equity in the business or in assets. Their relationship essentially ends after the transfer of money or goods and services, like those stickers you receive, or after the potato salad has been made. Again, these early crowdfunding opportunities were not investment opportunities. Now, equity crowdfunding, such as real estate crowdfunding, allows individuals to invest directly in hard assets, like multifamily properties or hotel buildings. These investors buy actual equity or a percentage ownership of that property, just as you would if you were to purchase a single-family home to use as a rental down the street. In that scenario, you would own a percentage, and the bank likely owns a much larger percentage of that asset. We'll dive deeper into how the real estate piece of that works in just a minute. I want to re-emphasize here the difference. The more recent types of equity crowdfunding are investments for the participants, not donations. Let me tell you a story. I once supported an Indiegogo crowdfunding campaign with the intention of getting a reward that felt like an investment, but it backfired. Let me explain. So there was a startup of a friend's company who offered online adventure maps. Now, if you know me, you know that I love playing outdoors with my family, kayaking, skiing, biking, whatever, right? But their crowdfunding campaign would allow me to make a one-time donation and receive, get this, lifetime access to downloadable, location-specific adventure maps. No more guidebooks for anywhere. I'd be able to print these maps out, and enjoy adventuring across the country for the rest of my life. Except that it kind of backfired because they cut the downloadable adventure maps from their platform within like a year. So what I thought was, or felt like, an investment, right, was really just in the end, of course, a donation. I couldn't have expected my money to continue to receive returns or those adventure maps over time because the transaction ended after I made that donation. Lesson learned. I'm happy to have supported that company, but I couldn't have expected my money to provide me a return over time because it was a donation, right? Even if I was promised to me in my tiered rewards. Okay, back to equity crowdfunding and how it's opened the door for more people, everyone in fact, to leverage passive real estate investing in their portfolios. But first, if you haven't already hit that subscribe button, help us share more education around passive real estate investing and give this video a thumbs up. It seriously helps us reach more people and share these ideas so that we can help everyone work towards financial freedom faster without being landlords. It's possible. Okay, so equity crowdfunding is an investment, not a donation. Got it. But how does it work to invest in real estate? Even though you may only now be seeing crowdfunding options to invest, the rules began coming back together back in 2012. That year, Congress passed the Jobs Act, Jumpstart Our Business Startups. jobs. With this legislation, investing in real estate syndications or funds passively became a whole lot easier for the everyday investor or the non-accredited investor. Regulation crowdfunding, or Reg CF, as its close friends like to call it, was adopted to implement a specific section of the Jobs Act. This is the act that also created the 506B and 506C rules already in use in real estate syndications. The rules for real estate crowdfunding piece didn't come back together until 2016. Now, remember the SEC, or Securities and Exchange Commission, created these rules to protect you, the investor, from fraud. Eligible companies must follow strict protocols that are expensive but essential to raise money this way. The regulations ensure that they aren't taking someone's last dime or blowing it on a terrible investment, and that they're disclosing those risks to you that are inherent in any type of investing. As you can imagine, this is why it took the technology longer to catch up with equity-based crowdfunding versus donation-based crowdfunding that doesn't require all these legal regulations to follow. Many more rules to follow in equity. But for you, for the investor. Now the technology is finally caught up with the regulations and is allowing more operators or owners to open up passive real estate investing opportunities to non-accredited investors and accredited investors. These are real estate crowdfunding investments. This is equity crowdfunding. If you want to better understand what this new form of crowdfunding looks like, I do a deep dive into how it works and why this new evolution is way different in the video I'll link to in the corner here. So what are these real estate deals that you may now have access to? Real estate syndications or funds are group investments. They bring together many investors to purchase larger assets that they wouldn't otherwise be able to purchase on their own, like a big multifamily property. We love this form of passive real estate investment for many reasons, like not having to deal with tenants or landlord responsibilities, and the incredible tax advantages we receive, and creating passive income streams to be able to live a life by design, to just name a few. When individuals invest in crowdfunded real estate investments, they buy shares in the company that owns the physical property. This means they're actual partial owners of that property. They aren't just donating money, they're investing it. And this is a huge difference. This is all facilitated through crowdfunding platforms, which is just a fancy way of saying a website set up to help connect real estate investors with operators while following all of the necessary legal regulations. Before now, these deals were only open to accredited investors due to the expense of setting up that legal structure to accommodate the non-accredited investor based on those SEC regulations. But now, the crowdfunding technology is allowing these deals to be able to open up to everyone, often with lower minimum investment thresholds. At Good Egg Investments, we're so excited for this evolution that allows us to offer ownership spots in our deals to early stage investors or non-accredited investors, like myself. Our mission has always been to help everyone build wealth, to get back more of their time, and to live a life with more intention. Now it's just a little bit easier to do that. Join us by signing up for our investor club. The link is in the description below. Also, take a look at our open deals and track record to learn more about how we operate. Again, don't forget to subscribe and like this video to get more of this content showing up in your feed and help us reach more people. And until next time, have a sunny side up kind of day.